What's up everyone, it's Caddy with Money Vesting. So it's been a while since I've done a Tesla video, so I figured I'd do an update on this company and of course go over the stock chart, the technicals, and also talk a little bit about options as well. So hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to a 16% annual discount available till the end of this month, and get access to all the buy and sell alerts, options alerts, trade ideas, and of course a lot of other benefits also included. Now, Elon Musk commented to a post which pretty much showed Warren Buffett's portfolio. I shared this with all of our Discord members earlier in the morning, but this right here was the actual tweet which shows the Warren Buffett's actual portfolio and of course how it's evolved over time since 1990s to where we are now in 2022. Of course, Coca-Cola, Gillette, American Express, Bank of America, Wells Fargo, Apple, McDonald's, all the usual Warren Buffett favorites, to which Elon Musk responds at the bottom says, or he could have just invested in Tesla at $200 million market cap when he had the opportunity to do so. So again, kind of mentioning that of course Tesla ended up being one of the best bets anyone could have made, and since that $200 million market cap, it has obviously grown 100x, right? It's gone to 2 billion, 200 billion, and right now it's trading at closer to $500 billion. So if you do the math, that's more like I can't do the mental math here. I think it's more like 200x growth for the company, closer to 250x to be precise, because if you're taking 5,000 divided by 2, yeah, that's 220. 5,000 divided by 20, we're gonna do 250. Yeah, so that's gonna be it if the company's market cap right now, of course, is $500 billion at the moment, which by the way, it's actually at 600 billion, so it's closer to 300x for 300x growth in the market cap. Anyway, so again, that was one of those things, and Tesla also announcing that Giga Berlin is now hitting up to 5,000 builds per week. So it's going to be a little bit over 250,000 vehicles coming out of that factory over in Germany. That's also absolutely staggering number. They've been able to scale fairly quickly in that sense. And of course, we know that the goal for this year for production, for deliveries more specifically, is going to be closer to 2 million vehicles. If Tesla can get up to 2 million vehicles, then that's going to be a very solid 50% growth year over year, and also a 50% growth on a compounded annual basis, which I've also talked about in my previous videos as well. Tesla's also offering a 10,000 free supercharging credits or miles for Model S and X for buyers in the end of the quarter push. So again, we're coming in towards the end of the quarter, so that is why, obviously Tesla is going to be making sure that they are selling out as many cars or vehicles that they are producing. So they are obviously using a lot of marketing initiatives. Of course, Tesla's been cutting prices as well, but Barclays analysts reiterated overweight rating on Tesla at $275 price target. We talked about it during our live stream. So market open live stream, I mentioned how Teslas did get an overweight rating with a 275 price target. And analysts expect Tesla will manage to deliver 425,000 EVs in the first quarter, which compares to 405,000 deliveries in the same period last year, and the consensus of 420,000 vehicles. Very fitting for Tesla here, the consensus 420. He says, and I quote, "Concerns have built up on the pace of deliveries amid weakening demand signals. However, we believe the commentary on the pace of production likely implies some upside, which we will assume to be in the 430,000 units in the quarter, and assuming the production only modestly outpaces deliveries, a reasonable assumption as there was already a large inventory build in the fourth quarter of 22. It supports upside results versus consensus," they wrote in the case. Another interesting thing about Tesla is what was I gonna say? Yes, the price cuts. So when you think about price cuts for Tesla, what we really need to watch out for moving forward in the future quarters when they start reporting their numbers for Q1 is how much was margin affected. That's the real question investors will have, right? Because price cuts, obviously, demand 101. If you cut prices, demand will come in, right? I mean, if there's already so much demand for Teslas, if they knock the price down by 10, 20, 30%, they're going to, accelerate that demand even more. But does that reduce margins for the company? That's the real question. And we're going to find out when the company reports earnings, right? So when they report their gross margins, net margins, operating margins, all that I think is going to be super important for the investors, because if they are able to increase sales volume and increase the deliveries in terms of units at the expense of margins, I don't think that's going to be very well received, right? Because you are pretty much lowering your margins, lowering your profitability in order to sell more, right? I would rather have Tesla keep their higher standards, keep their higher prices, and maintain those margins despite the demand being very steady, instead of accelerating it because of lower prices, which also happens at the expense of margins. I would not prefer that. So again, we're going to find out very soon if Tesla can maintain those margins, higher margins, despite the price cuts. That's going to be the big question in the upcoming earnings. Tesla also flirting with the Turkey release here on April 4th. So that's going to be coming out very soon, next week. And going over to the technicals, we're, by the way, going to come back to this cash secured put calculation and what I'm actually looking for. I already did a video on Tesla, Microsoft, NVIDIA earlier today talking about how those stocks are definitely at the very top of the list when it comes to buying opportunities for me. But my fair value on Tesla, as you already know, is closer to 120s, 130s, to be precise, 124, 125 levels for Tesla, considering a modest 20% growth and 20 times P multiple over the longer term. Of course, they can get over 50% growth and over 50 times P multiple in the short term, but over time, I believe that the growth rates and the multiples are going to compress. They're going to stabilize a little bit and come down to more reasonable levels. So in terms of technicals, I would say that Tesla is still very much in a overall downtrend where it continues to trade in this widening downtrending wedge. So this is the lower highs, and of course, you got a lower low sitting right over here. And right now what we're seeing for Tesla is a lot of consolidation. We've had a very strong couple weeks where Tesla was up 5% last week. The week before that, we were up another 3.8%. Year to date, it's performing really well, up 61, 62%. And now we're getting up to this resistance, which is this red line you guys see on the chart, sitting roughly at around $200 per share. So we are struggling at the moment for Tesla to break out above that level. If and when Tesla breaks above 200 again, we've got a very strong resistance sitting right over here at 227, 228, $230. So that is going to be that next level to watch. And of course, I've got covered calls sitting all the way up to $250 per share. If Tesla gets up to that level, great. I don't mind trimming some of my position. If it doesn't, I keep the premium, and it's pretty much free money at the moment. Now, in terms of buying more, right? Because I do plan on buying more, and I really want to, because I do believe the long term Tesla's got insane amount of potential and a lot of value there. But again, I'm not super comfortable with the valuation. That's when we come over to the options chain and look at some of the cash secured puts. Now with CSPs right now, unfortunately, since my fair value is down to $125, $130, and the price itself trading at $191, we do have pretty sizable downside for Tesla. I mean, in other words, 34 to 35%. It would need to come down in order for it to be kind of in line with my personal intrinsic value on Tesla. Now, because of that, we're not getting super high premiums. Like, I'll have to go out really far out. Like, if I go out to June 16th, and then if I look at $130 around those levels, that's when we get $3.15. 140 is going to be $4.50. That's going to be a bit of a stretch for me. So $130, $3.15 is not going to be super high in terms of collateral return. So 130 minus 315, 126.85. So 126.85, that's going to be a return of 2.5% over the course of over 2 months, right? That's not a great return. So I'm going to be using this calculator. It's a very, very easy. What you do is you pretty much put down the price where it's trading right now, the strike price itself. So in my example, if I'm looking at, let's say, $130 and expiration, you put down the date. So let's say, I'm looking at June 16, just for this example, not really going forward with this one, but let's just say June 16, 23. It automatically calculates days till expiration, 80 days, and the premium that you're expected to receive, which is going to be for $130. It's going to be $3.15. So we plug that number in, and then it calculates how much collateral we need to set aside. It calculates your total return, which is 2.5%. It calculates per day return, and then it also calculates the return per month and annualized rate of return, which is going to be 11.33%. In other words, if I actually go forward with this play, this would generate a return similar to 11.33% annualized, right? It'll be almost 1% per month. My threshold's a little bit over 1%. It's closer to 1.5%. So in order to sell these CSPs, I'll have to either wait for the price to come down a little bit, or I would have to go further out in expiration to actually generate higher premiums in order to justify that selling that CSP. So right now, with respect to CSPs, I'm going to have to wait a little bit longer I'm still, really looking forward to Tesla kind of establishing a direction as to where it ends up heading. If it does break out above its $199, $200 resistance, gets up to 222, 225, I will be looking at maybe rolling out my covered calls and selling new ones. But if it does start to sell right back down, I will be looking forward to selling cash secured puts at my desired intrinsic value strike price. And of course, the premiums will be much higher. And then we can look forward to, getting 4, maybe 3 to 4% in total return, and about 1.5, close to 2% per month, because I'll only be doing it for 30 days to as much as 60 days out for Tesla. So I hope you guys enjoyed this video. Just wanted to go over the technicals, some updates on Tesla, and let me know your thoughts down in the comment section below. We're still very much in a downtrend. Big resistance levels sitting in the 220s for Tesla, and of course right now at $200 as well, and support levels going to stay put roughly in the 160s to as high as 175 for this company. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe to the channel. Let me know your thoughts down in the comment section below. As always, happy investing. I'll see you all in the next video.